Hey guys, welcome back to Bitcoin Math. I'm Shane. We're going to go through the Bitcoin Treasury model today. So, first things first, what is a Bitcoin Treasury? If you're not familiar, well, it's a company, whether it's an S Corp, a partnership, an LLC, or a large enterprise organization, ultimately converting some or maybe all of their balance sheet assets into Bitcoin. Now, some companies work only in cash, others are investing in stocks, others are investing in commodities or putting their money into money market funds or CDs or other traditional products to help combat the known impacts from inflation. Because if you're a cash rich company, well, if you leave cash sitting on your balance sheet, we know it's going to lose its purchasing power over time because of inflation. And so a lot of companies, we just saw this with Nvidia, we've seen it with Apple, we've seen it with so many of these Mag 7 and S&P 500 companies. They oftentimes take their cash and they use it to buy back their own stock, which ultimately creates scarcity and allows the price of their shares in their stock to be pushed up at the margins, therefore increasing the enterprise value of their company. This has been happening for decades. But then came along Mr. Saylor, and if you're not familiar with who that is, I encourage you to look him up, look at what he's doing, look at his corporate playbook, and understand some of the impacts of that, which we'll get into. So first things first, though, this is not wrong tab. This is not anything new now. There's hundreds of companies that have adopted Bitcoin treasury strategies. Now, they're not all going all in like Michael Saylor and converting everything they have to Bitcoin and even raising capital to buy more Bitcoin, but they are figuring out ways to convert their cash or some of their cash into Bitcoin. And that's what we're going to cover today. But if you're not familiar with who some of these companies are, I encourage you to take a look. BitcoinTreasuries.net has the list. There's also plenty of books out there on what Michael Saylor has done. Whether you're talking about this book or whether you're using his open source Bitcoin strategy guide, there's plenty of resources out there. Strategy also does their Bitcoin for Corporations conference every year. Something else you can check out and really hear all about this. And the last thing we'll look at here, or I should say the first thing that we'll look at here, is a chart to kind of see why this matters. So we'll start at the bottom. This is the CPI inflation since 2020. Now, this is the number that the Bureau of Labor and Statistics controls, that I think we all generally agree is a synthetic or manipulated figure. But even that in itself says that over the past, since 2020, 5.5 years, you've lost about 25% of your purchasing power if you're saving dollars. Now, if we use the more widely accepted number for inflation, which is the monetary debasement rate, the increase in the M2 money supply, that is a little over 43%. Okay? Now, this is why companies buy back their stock. This is why they invest in money market funds. This is why they put money in high yield savings account and have CDs and perhaps even invest in gold and equities and things of that nature, is because, well, if my cash is sitting on my balance sheet doing nothing, then I'm losing purchasing power on that cash over time because of these things that are happening through debasement. So they might invest in S&P 500 stocks, and if you did that over the past 5.5 years, well, you're up about 100%. Not bad. Same thing with gold, right? If you're converting your balance sheet assets into gold, good for you. You are outperforming inflation on both forms of inflation. But when you look at Bitcoin over the past 5.5 years, well, it kind of dwarfs everything else pretty significantly. And this is because, well, there's a fixed supply of Bitcoin And despite the efforts and the FUD and the constant news and the constant fear mongering, well, nobody can actually do anything about this. You can't shut Bitcoin down. You can't control it. You can try to copy it, but we've seen the dozens of Bitcoin forks who have gone the way of the dodo bird. And so Bitcoin has become somewhat inevitable in this space of a hard monetary asset that's fully decentralized and has a fixed supply that cannot be inflated. And as a result of that, more people are becoming aware, they're adopting, they are buying, they're converting their dollars into Bitcoin. So add to that the asset price inflation fundamentals, and add to that Bitcoin's fixed supply and the network effects and the growing adoption, and you get this, exponential growth in this particular asset, which is what makes it compelling for a Bitcoin treasury, and of course why Michael Saylor decided to convert all of Strategy's balance sheet assets to Bitcoin and has now been raising capital for the last several years to buy more. And what has been the result of that? Well, the result of that is I had to give this an entirely new price pane because, MicroStrategy's up over 2,200% since the beginning of 2020. And that's not because they're producing more or better software. They're probably actually losing market share in that regard because, Microsoft and Meta and OpenAI and these other companies, they are dominating the space and making it really, really hard to compete. But at the end of the day, if your entire balance sheet is made up of a hard monetary asset like Bitcoin that continues to grow and appreciate over time, well, that's going to have benefits for the enterprise value of your company. Michael Saylor understands this very well. That's why he's adopted this strategy. And you can see what the results of that have been since 2020 when we look at how that, comparing that to all of these other assets or asset categories in that time span. So the big idea here for this and for you, if you're interested in, how would this look for me? Well, let's take a look over a 10-year period and see if I were to buy Bitcoin and it were to appreciate at a set growth rate over the next 10 years, and I were to pay a fixed amount of interest on the money used to buy that Bitcoin over that period, what would that look like from a high-level economics perspective? Now, if you're converting existing cash flows to Bitcoin, great. If you are taking on new debt to buy Bitcoin, great. This model is going to assume that either way, you are paying interest on the money that you're either not spending to pay down your debt service or on the new money that you're borrowing to buy the Bitcoin. So it's going to start with an initial purchase. Let's go ahead and say I've got $20,000 that I want to use to buy Bitcoin to start this strategy. And then every month on the same day or around about the same day, I'm going to buy the same amount of Bitcoin or a similar amount. And let's say that's going to be $2,500. Okay. And the interest rate I'm going to pay on that, let's say it's going to be 7.5%. That's a roundabout average of what I pay to borrow for my business expenses. And over the next 10 years, because this is a 10-year model, what do we think the Bitcoin CAGR is going to be? Well, if you're not sure, come here and look at the historic CAGR right here. Okay? Over 1 year, it's been 83%. Over the last 5 years, it's 56%. Over the last 10 years, it's 85%. But over the last 4 years, it's only 23%, right? So there's obviously some variance here. Model it accordingly. On our CAGR bars, you've got Saylor's bear case 21%, you've got his base case 29%, and you've got his bull case 37%. But you can model anywhere from 0 to 100. So let's go ahead and say Saylor base case 29% and see what happens. First thing you're going to see is this chart. This is going to show the final balance at the end of this 10-year period, representing 4 metrics. The first metric is how much debt did you accumulate in this 10-year period by buying Bitcoin? Okay, that's going to be this blue line. And then we're going to jump over to the orange line. That's going to be the interest owed on that debt. Now, maybe you paid this, maybe you've been paying this interest ongoing. Maybe you have a credit facility of some kind where this accumulates. Either way, this is really just looking at how much interest you would have paid on this debt that you've accumulated over this 10-year period. And then in red, we've got the value of the Bitcoin after it has appreciated at 29% growth annually, compounding, of course, for a 10-year period. And then we have the profit, right? When we subtract the debt from the Bitcoin value, and we also subtract the interest paid on that debt, we end up with a net profit number. That's going to be shown in green. And then if you come down here, you have all the data, right? You've got the data table by month, right? So month one, you've got your $20,000 purchase. That's how much Bitcoin you were able to acquire with that $20,000. This is your total Bitcoin, and this is the value of your Bitcoin, right? The BTC price times your total Bitcoin equals your BTC value. Your debt balance, pretty easy number, that's just going to be how much you've spent on Bitcoin up to that point, because you're borrowing each of those dollars to buy the Bitcoin every single month. Okay? Now, when we take your debt and we subtract that from Bitcoin's value, you end up with your gross profit. This says net. It's getting updated. But then when we take your interest owed, right, because you have an interest expense on that debt, and we remove that from your gross profit, we end up at your net profit. Again, updating this column. And if we roll this all the way forward, say after 10 years, what does this look like? Well, at 29% compound growth annually, Bitcoin's worth just under 1.4 million. We've stacked 1.15 total Bitcoin using this strategy. And that 1.15 Bitcoin is worth just under $1.6 million. Now, it did cost us $317,000 to acquire that Bitcoin. So when we reduce the debt, $317,500 from our 1.6, we end up with a little under $1.3 million in gross profit on our Bitcoin. But then, of course, there's interest because we had to borrow that money and we had to pay somebody interest to be able to borrow that money. So when we subtract the interest paid on our total debt from our gross profit, we end up with our net profit after 10 years, which is a little over a 900% return on your investment. Okay. So super high level math. And if you are considering a Bitcoin treasury strategy, hopefully that helps, or at least gets you thinking directionally about some of the long-term benefits here. The other missing piece to this that I would encourage any and all to consider, whether you're a person or a stakeholder or an owner operator of a business, DCA, dollar cost average, right? And use River to do that. River's got fantastic tools. They've really become the creme de la creme Bitcoin exchange to help people buy, sell, manage Bitcoin. They're focused on security. They're focused on trust. They're focused on transparency. They've got several thousand commercial clients on their platform. They're adding more and more every single day. And they've also got a really, really nice onboarding service specifically for commercial clients. Not to mention, if you've got cash and you want to park cash on their platform, they will pay you almost 4%, 3.8% APY on your cash earning Bitcoin. So take a look at River. Our link's down below if you want to earn up to $100 for signing up with them. And we're happy to answer questions, get you connected with our team over there if you want to learn more. And with that, welcome any feedback. If you have any suggestions how to make this better, we do make it easy to leave feedback. Let us know your thoughts. If you have any suggestions, we'd love to hear them. Really appreciate your support. Thanks so much, and we'll see you on the next one.